Hey, welcome back. So in this video, I'm going to give you a crash course on stock market. So this is probably the only video that you have to watch in order to learn about stock market. Just get a basic understanding. If you're brand new to it, I'm going to explain to you why are stocks out there, what's the purpose of it, and how can you make money from it, right? And you don't need to pay money at those crazy courses which teaches you what a stock market is. I'm gonna do that to you right now in this video, okay? I'm gonna give you all the good points in an easy to understand language, which doesn't include mumbo jumbo. A lot of people do that. I don't like it with me, right? So I grew up learning things, so I'm a dumb guy, right? I'm a dumb guy, right? Well, not all the time, but I learn things in a simple form, right? And I like to explain it to other people in a simple form and understanding manner. And I'm going to do that to you in this video. So, what is stock? Okay, what is a stock? Okay, so a stock is pretty much a company. Okay, let's say I'm a company. I'm a Starbucks. Okay, so Starbucks is a brand new company, or it's been a while since they've been around, and they say, hey, I want to take my company public. Okay, that's a dream of any company. Well, most companies, right? They want to take the company public because the company will outlive everyone. Because normally, right, if the company doesn't crash or go bankrupt, so Starbucks wants to go public. Now it goes to an exchange called NASDAQ or NYSE or over the counter. So what is an exchange? So exchange is and it's a company that will let you list Starbucks or your mouse or whatever your company you have with that exchange. Now, and I say, hey, I got Starbucks, I own Starbucks. Now, I want to go ahead and raise some money. So I want to sell one stock for $50. So, and I want to put out 1 million shares out. Okay, what am I doing? It's called an IPO, initial public offering. Now, at this moment, Starbucks is no longer a private company. Now, at this time, I think I need to put this up. Give me a second. The sun is about to set down up here in Texas. So at that given moment, right, the Starbucks has decided to go from a private company to a public company. Now, that means that you, as a stock owner, own, if you want to buy in, you could buy it. Now, keep in mind that as a stock owner, you don't have to worry about the day-to-day operations, or, they won't invite you, hey, Bob, got to come here for this. They will only invite you for that if you own a large percentage. For example, okay, you've all heard of Warren Buffett, right? He owns, I think, a large amount of Bank of America and all these other companies. So they invite him because he owns a large share. He's on the board. You and me, we own like 1,000 shares, 50 shares, 5,000 shares. We're not, we don't own majority or anything like this. We're just here to make some good money, okay? So when Starbucks goes to an exchange called NASDAQ or NYSE or over the counter, right? They list Starbucks. They give it like a ticker, like it could be STBK, or let's say I sell mouse, so it could be MSC. I don't know. iPhone has Apple, so APPL, right? So they give it a ticker. So ticker is what you trade. Okay. Now keep in mind that these exchanges, so for example, UK has a London exchange, right? And India has Nifty, Sensex. These are all exchanges, okay? And as a retail investor, retail means that you invest from a comfort of your home on your phone or on your laptop. You are a retail investor. I am a retail investor, okay? That means that we're not, in a business of collecting money and trading millions of dollars. We're trading $20,000, $100, $500. So we are called the retail investor. So you're about to be a retail investor. You're a retail investor already. So now we understand why do people actually go public to raise money, okay? Now, when a company does an IPO, let's say Starbucks, I want $50 per share, people buy it, hoping that it's gonna be $100 or it's gonna be $200 at one point. Okay, and what was Amazon's IPO? Can you check?
Amazon's IPO?
I want to see. So Amazon right now, you've all heard of it, right? Amazon is trading at almost 3K at this time, right? So I want to see what was the IPO.
Okay, give me a second here.
And so I just wanted to show you that, hey, what happens.
So on May 15th, 1997,
Yep.
their IPO was $16 per share.
$16. So imagine. So $16 is worth almost how much? 3K?
It's, a little over 3K right now.
So you see the power of, IPO. So, but keep in mind that sometimes it might tumble down. Not always, but it might tumble down if the company is not doing so great. Now, so what makes almost $17, right?
Yes.
What makes a $17 stock be worth 3K? Speculation, okay? Speculation is, Starbucks here. Hope Starbucks won't, I'm not, do I need to say, I don't own Starbucks, this is not supposed, this is supposed to be an example, okay? So let's say Starbucks says, okay, we're doing a $50 IPO, and then 6 months later, keep in mind, company also owns a share, so they're not giving out the entire company. So let's say I founded a company, I keep 20% to myself, okay, right here. And I give the rest to other people, okay? Now, keep in mind, I'm still a majority owner, okay? I do want the stock to go up because my net worth goes up and up and up and up and up whenever the stock price goes up. Now, why does the stock price go up, okay? Let's see, can I get a piece of paper?
What?
Do we have a piece of paper?
No, I don't think so.
Man, what kind of office is this? So, it's okay. So, let's pretend this is a stock, okay? One stock, okay? So, I bought a stock at IPO of Starbucks for $50, okay? Now, Starbucks says, hey, we're gonna open up 50,000 more stores in China. Oh, wow. Amazingly, this thing is worth more because, speculation. They announced something good is happening. Or, they said, oh, we made $5 billion earning calls, okay? Or, or they say, oh, okay, we're losing money. That means that $50 could be worth $25 too. So you see that it's all speculation. So whenever a price of a stock goes up, it doesn't mean that much money is being earned by the company. So I own it. I bought it at $50, and the Starbucks announced they're going to open up more stores. So I sold it to Nikesh right there for $100. At one time, and it's worth $100 because the market says it is. But sometimes the market says, hey, it's not worth it. Or sometimes, for example, let's say, a bigger company comes out and says, hey, we're going to go ahead and buy Starbucks. The price is going to go up because there's a merger. So see, investors and these financial gurus, they come up with these crazy names, but this is pretty much common sense. If a company is about to do good, it's a rumor, right? Then the stock price of this value of this stock goes up. So now you know what a stock is, what an exchange is, what an IPO is, right? Now, there are two kinds of investors. Long term, meaning, I buy it in, and hopefully when I'm 60 and, I'm like walking with my cane, and I got $1 million sitting in my bank account on my stock market account. That's called a long-term investment. Okay, not that long, right? It could be a couple years. So long-term investment, you shouldn't be worried about small movements. And keep in mind, okay, that you don't have to worry about. Short-term is pretty much income. So for example, short-term means that you might buy it this morning and sell it in the evening, or you might buy it today and sell it tomorrow. Okay. That's called a short term. So what is the big difference? So short term is done so that you have an income. You're replacing, so let's say you're making $200 a day. You might say, oh, I'm not going to go to job anymore. I'm not going to work at that place anymore. I'm going to go ahead and do short-term investment. So you are a short-term investor. There's nothing wrong with that, okay? So long-term, short-term. Which one are you? You could be both. You don't have to be a single one. So for example, me, right? I'm a both. So I have a retirement account where I buy, buy a long-term stocks that I know are going to go up in like net 10, 20 years for a long term. On a short-term account, I do day trading, swing trades. If you don't know what that is, I'm gonna put the link somewhere here. Nikesh, can you do that?
Yes.
And I'll teach you more about long term and short term. Okay, let's move on. Now, once you know these things, now next step is to get a broker. Now, what is a broker? So keep in mind, I told you you are a retail investor. What are other kinds of investments? So we have retail and institutional investments. Institutional means that they're trading like $1 million, $1 billion, a lot of money. Okay, so as a retail investor, we need to find a broker. Okay, broker who will go ahead and trade. And let's say I want to buy this, right? And then the broker buys it from the exchange. We talked about it, right? So you know. So which broker? So there are brokers like Robinhood. So keep in mind, Robinhood is pretty new and they changed the game. Back in the day, every trade used to cost $10. Expensive. It gets expensive if you do it too many times. So now Robinhood has changed the game for everybody. So Robinhood, TD America, Vanguard, even Chase Bank, all these companies they can act as a broker. Which one do I recommend? So my take is this, okay? So if you're starting out, Robinhood or Webull, those are great, okay? Now, if you're trying to get into active trading, meaning if you're trying to do, active trading, meaning buying and day trading, right? Then I would go to TD America because they have better software, or Interactive Brokers. Those are a little complicated to look at, but they serve you better. Okay, now I also want to go ahead and tell you that, okay, if you're doing a long term, you might not want to go with Robinhood or Webull. You might just want to go with Chase Bank or Fidelity, right? TD America is good too. Go with a company that's been around for a long time if you're into long-term investment goals. But if you're short-term, Webull, Robinhood, TD America, it's good for both. Use those, okay? Which one's my favorite? Webull and Robinhood if you're just starting out, and TOS, Thinkorswim, or TD America for active trading if you're a little advanced. Okay, so those are my favorite ones, but there's not really a bad broker as long as they have a reputation to, just Google it and make sure they don't have a bad reputation of they're not gonna go. You will be safe because the government will take care of you. They have regulations, but just make sure you're not going with a company that started yesterday. Okay, make sure they have a good history. Just keep that in mind. Okay, now there are two kinds of trading: fundamental and technical. Fundamental means that, hey, Amazon is trading. Amazon made this much money. So yeah, this is worth this much. Or Amazon bought that, or Amazon has this much cash, or Amazon has this much revenue last year. So these are all called fundamental. Just know that. So if a math is involved with money, right, it's called the fundamental, okay? So fundamentals is pretty much that. Okay, you don't need to, there's so many ratios we can talk about, but this is not the video for it. Just know that fundamental means that we're looking at how much money is this company burning per month? How much money is this company making? Okay, what does this company own? Assets, okay? That's fundamentals. Technical means that you look at a chart and you don't worry about fundamentals, okay? That's called active, that's called day trading. So if you're a swing trader, meaning if you buy today and sell it tomorrow, it's called a swing trade, funny names. Or if you buy this morning and sell it in the evening, that's called day trading, right? So short term, you can look at a fundamental, but most people don't. I don't if I'm doing a day trade. Let me show it to you, okay? Let's get on my trading view right now. So Apple, everybody knows Apple. Okay, so Apple is a stable company, right? It's a stable company. It's good for long term for sure. But if I do want to day trade it, meaning short term, what I could do is look at the stock, right? Look at the stock. What I can do is I can look at it, and I know for a fact that I'm looking at it, right? I'm zooming it in. I'm gonna go here, 15-minute chart on August 20. Okay, it was at this price, and I see this big long bar, green bar, right? That signals me that, hey, this is about to go up. So at this point, I buy in. But once I buy it, I hold on to it. Okay, I hold on to it. It's called dojis. So many things. Okay, you just move on, move on, move on. And at one point, I see another doji, right? Okay, I stay, hold on. But the moment I see two red bars, for the sake of simplicity, when I see two red bars, or if I see a gap, meaning there's a big gap, okay, because this is when they announced that they're gonna do something, I think splits, that's when it kind of dropped in a little bit, or when it went up again. So it went up actually. The gap is, you know, positive here. So that's what happened, right? But it fell because people started to take profits. Okay, so you could have bought it. You know, when you see this doji means that, you know, buyers and sellers. So buyers and sellers. So buyers are called the bulls. Sellers are called the bears. Why? So bull attacks. So bull attacks like this. Okay, so they have a bull. So I'm a bull, right? So if you want a stock to go up, so you're like, okay, I'm a bull. Imagine I'm a bull, right? I hit it like this. What is it? What is this? Up. I think we're gonna laugh. I hope you remember this. So bull. What is it? Up, right? Now bear. So think about it. Up, down. Up means buyers, down means sellers. Make sense? So you know what? So when I say bulls and bears, you get the idea now. Okay? Yes? Bueno. So this is called technical trading, meaning I'm trying to time the market. Now, I might not do this with Apple because it's a stable company, but I will do it with a company that is volatile, meaning it's like going up and down, up and down, up and down. I'll find the right place to buy it and sell it before it goes down. That's called technical trading. Okay, just know that. Okay, you don't need to. Like I said, this video is not to. This video is not to confuse you, just to make you understand the basics, okay? So you don't have to buy some course on some course site for like 50 bucks. Fundamentals, I'm looking at the assets, numbers, okay? Technical, I'm looking at the charts, up and down, up and down. You get the idea, okay? Now, is trading same thing as gambling? Well, here's the thing. It is a sort of gambling, right? It is sort of gambling, but it's not like going to Vegas, right? Where, on those slot machines, everything is programmed. It's programmed for you to lose, right? Now, fix this, man. Fix this. It's programmed for you to lose. Now, in stock market, if you know enough about the fundamentals and technical, you don't have to lose. You can win because, you know, you might be a bull, meaning you think it might go, or you think it might go down, right? So keep that in mind. So trading is not, it is gambling in a way. If it's only gambling, if you're just opening up your and just buying randomly, right? Buying randomly, or you hear somebody, oh, let's buy it. That's gambling. But if you do the research, like for example, you're watching this video because you don't want to be that gambler. You want to be the guy or gal who knows his or her stuff. And that's when you go ahead and invest. So you're not a gambler anymore. Make sense? Okay, now, managing risk. Okay, so one of the biggest problems as a trader or investor is, you know, losing less money. You lose some money sometimes. That's okay. You might see some negative. It's okay. Okay, that's a part of the business. Okay, that's a part of the game. That's a part of the trading business. But make sure that, you know, if you're investing on a stock that is, you know, short term, if you see a lot of loss, cut your losses. It's better to go back home with some money than $0. So make sure that, you know, make sure to learn how to manage your risk. Make sure you don't go below, what you are, willing to lose. So for example, what I do when I'm doing short-term investment, if it loses 50 cents, I'm out. Usually, right? Usually, not always. Usually I'm out, okay? Because that's it for me, okay? I don't want to risk it anymore. And for everybody, there's a different risk, but usually 50 cents, okay? Usually, if it's a short term. Now with Apple, if it goes down 10 bucks, I'm fine. Apple, long term, Netflix, Google, I'm fine. It's just an overreaction. So whenever these big companies go down, right? You're like, oh, sell. No, you should buy because it's an overreaction and market will correct itself. So let's say the stock market is a bull. Okay, it's going up and up and up. Oh, boom, 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 it tumbles. You're like, oh, I'm losing money. Wait, do not sell because market will correct itself. That's a good time to buy. Okay, so you know that. So, and why should you choose stock market as as a source of getting wealthier? Here's the thing. Okay, a lot of people make it sound like stock market is a bad thing. It's like they think it's greedy people. Yeah, sort of. I am. And a lot of people agree that's fine, but it's not. It's a great vehicle for anybody to go from being nobody to somebody. Okay, so that's the beauty of it. That anybody sitting at home watching this video can do it. Okay, so it's a great vehicle for you to change your life around or mess up your life if you don't watch, if you're not careful. Okay, but you can do it without any formal education. Well, you can get licenses, but you don't need a formal education. All you need is a little bit of money sometimes and a computer and my videos. That's all you need. So that's it. So I hope I was able to give you a quick crash course on what stock market is. And if you have any specific questions, please put it on the comment and I promise to get back to you ASAP. Now, with that being said, go ahead and like this video if you enjoyed it, and also please subscribe so I can share more information with you in coming days. And I have more videos on my channel on stocks. I think you'll enjoy it. Thank you so much.